Good evening, everyone. This is the Relative Edge. Today is Sunday, May 31st, 2026. Got a lot of important stuff to go over this week. A lot of stuff I want to touch on. Let's jump right into it. It's going to be a short video just because I'm traveling. But without further ado, let's start with the 10-year yield. Macro, breaking out of going into a bull flag pattern in a downward parallel. The last couple of weeks, we came down off the top of the parallel where we had the high here, lower high here. Got rejected, but we had on the night September 16th, 2024, we had a low. April 7th, 2025, low. And if you were to draw a trend line at the bottom of those lines, we were finding a resistance up against them. But we broke out, tested the upward, downward parallel channel. And now it looks like we have to see what happens when we come back down. So I wouldn't be surprised to see this week this come down further, test this downward, the trend line right here. So we'll have to see what happens. But if interest rates continue to go higher, it's going to put pressure on the markets. It seems like S&P 500 and the general indices have kind of just shaken off any high rates or high interest rates. So I'm curious to see how that's going to affect things. But we've seen other markets be affected by it. So let's see how the dollar performed last week. So yeah, just in general, this is a weekly chart. 100 is very strong resistance or support. We're technically consolidating below. So this would be a bear flag, so downward move, sideways consolidation. We haven't been able to get over the 100 despite multiple attempts. One, maybe you can call that two if you want, 2, 3 attempts. Haven't been able to get over 100. And look at this control bar right here. On the weekly, January 19th, that week of 2026, that's the control bar. And the control bar is a strong move down. And what you want to do is mark the highs and the lows of that bar. So if I were to, there's already a line at the high, right? Now I just want to draw a line at the low right there. So we've really just had sideways consolidation. We did break out above here, but a breakout and close, continuous closes above this control bar is going to be negative for the stock markets and specifically gold and silver. Yeah, but this is kind of interesting. I'm going to zoom in a little bit so you can get a better idea of what's going on. You can see that control bar, January 19th this year, strong move down. We had some resistance when we came back up, right? And there was also some strong resistance here at 97 point, or you can call that 98. Got rejected here, rejected, broke out, and then found some more resistance at the 99.4 level. Didn't last long above it, and last week we tried 1, 2, 3, 4, 5, 6 times getting above, rejected, came back up, rejected again. So this week, I'm anticipating a move further down to test 97.9 or 98. That was the previous resistance before this upward move. We've seen bounces here before, over here, and over here. How that affects other markets. Let's go to SPY. SPY seems to shake off literally everything. Insane move up. If we were to just do a quick percentage move from that low, March 31st, up 20%, pretty much straight up since then, more or less. So SPY, looking solid. We were having, if you look on the weekly chart, each one of these bars is a week. We had this bearish divergence where we were getting higher highs, lower highs on the RSI, and we broke out of that right here. If you were to just draw a line at the top, maybe I can adjust this a little bit. Let's adjust that, bring that up like that. And yeah, it's clear that we broke out here. I would expect at some point we get some type of pullback and test this bearish divergence line. It looks like we've had multiple green bars on the weekly, so I wouldn't be surprised to see some type of pullback. Um, but as of right now, this is bullish, but be cautious here. Let's move into silver and gold. Tricky markets here, kind of trading sideways, but holding up right now. I just wanted to go to this is the daily chart right here. Kind of just some sideways consolidation. If you were to mark the highs, the previous highs, so January 29th, March 3rd, April 17th, and then again May 12th. It looks like this is a downward parallel channel, and it looks like we actually broke out here. So assuming this holds, we should be moving higher soon. Next test would be 4,600, 4,700 and up really is bullish for gold, so that's important to keep in mind. Silver is going to follow gold. Silver holding up very nicely last week, kind of right on the edge of a cliff. So we're still above the 50 on the RSI on the weekly, which is good news. We're pretty much just trading sideways, nothing crazy, but we have had multiple tests. What's this? 1, 2, 3 times where we wicked lower and still came up. So let's see what happens this week. Downward level would be 71, 72 support, where we've bounced several times. So we'll see what happens there. But kind of just need to wait and see. The dollar is going to really determine where the metals go. So stronger dollar, weaker metals, weaker dollar, stronger metals. But I want to look at the relative charts because honestly, you don't really get much information just looking at these charts. They can be very confusing. So I want to dive into the relative charts. This is the MMRI, the Mannarino Market Risk Indicator, where this measures the 10-year yield in the dollar divided by 1.61 golden ratio. And you can see we've been following this for the last few weeks now, actually. Check this out. Every time we get to a high on this RSI down here, I drew arrows here to indicate where the highs were. We topped out. So October 2022, September 2023, January 2025, now March 2026. But in January 2025, we had a double tap. So we touched a high right here and then came down and tested the 50 on the RSI and made another high. That looks like that's kind of what we're doing right now. But we kind of need some more confirmation here because right now we're still above the 50 RSI, which means that this is still bullish. So we did break down. We were trading this upward parallel channel. So now we're going sideways. So very key levels to watch. I actually want to draw a horizontal line at the previous high to see how, because we've now broken below that previous high. And actually, now that I think about it, it makes me want to look back at this one because this is where we got the previous double tap. And let's draw a high, a trend line there. So yeah, once we got below that line, we did come back up one more time, test the top end of this parallel channel, and came back down. So that's what we want to watch basically this week. Do we stay in this downward parallel channel? Do we stay below this high? It's okay if we come back up above the high, but if we continue higher, then that means the risk is increasing in the market. So we want to see this drop. Dow Gold ratio still climbing above the 11.15 resistance, which is now support. So we broke through this resistance, and look over here. April 25th, strong low, strong buyers here. October 2025, strong buyers here. And then we had two strong wicks in February and late March. Now we're broken above that. So if we continue higher here, that means that there may be a short-term trend change. One thing you want to note is that on the RSI daily, we are extremely overbought. We're above 70. So a trend reversal is likely in the short term, meaning that you would want to be in the denominator, which would be gold here. You want to start trading your Dow for gold. But that would be, of course, if we break down from this level. gold silver ratio still in a downtrend right now. Kind of just moved sideways last week. We want to just watch this RSI and make sure that this remains in this downward parallel channel, both on the price chart and on the RSI. I expect this to break down this week or the next few weeks, favoring an upward move in silver and gold, but of course silver outperforming gold. But it's getting close here. We had this strong move down in mid-May, came right back up to where we were, and we're still sideways consolidating. So we're still in this downward parallel channel, and until we break out, we have to assume it's going to continue. And a break below the 50 would mean a strong move. One thing I do want to look at, one is the silver oil trade. So silver had a massive drop in January, and that's when oil kind of just took the lead, and since then was running strong. And since March, late March, or you can just say April, silver and oil have more or less been trading together, with silver slightly outperforming. So this is a downward, this is a falling wedge right here, which is a bullish pattern for this pattern. So that means silver would start to outperform oil. And then we have a pennant here where we actually just broke out of. So last time we broke out of the pennant, that's what happened. So we not only broke out of the falling wedge, but now we broke out of the pennant. So assuming we continue higher, outside of this RSI on the down here, and we stay above the 50, favoring silver over oil. Sorry. So I expect silver to continue to outperform oil. Yes. One really interesting chart: gold miners versus silver miners. This chart is hanging on the edge of a cliff. Check this out. Really strong resistance and support at this 0.95 level, right? We had some consolidation here. Look at this back in July 2020. Strong move down when we broke this level, right? After bouncing, consolidating. And then right here, another strong move up. We came back down and tested that same 9.5 level. The same level was tested again in December 2024 and tested again January 2026, late January 2026. And we now closed below that. So very soon, when gold miners underperform silver miners and break this key ratio, not only does silver go parabolic, but silver miners go even more parabolic. So a move up can be imminent, or very soon, once this ratio breaks. Once we break that 0.95 level, that's going to be significant. You see what happened last time we broke here, a strong move down. So right now the RSI is showing lower highs, so it's indicating that we don't see any bearish divergence here or bullish divergence here, indicating a trend change. So it's likely that this trend will continue and we will break this support. What else do I want to go over here before we wrap it up? Real quick, I want to look at silver versus Nvidia, because Nvidia is one of the strongest stocks in the stock market. And this is a weekly chart, right? Each one of these bars is 1 week. We were trending down, right? Now we're trending sideways. So that means, and this was this actually can be classified as a bull flag, right? Upward move, sideways consolidation. We came back, tested the support. So look at this. We broke out here, came back, tested exactly where we broke out. And now we're holding. We're no longer trading down. We're now trading sideways. So if we move to the daily, once we start moving, this shows that basically silver is no longer weak versus Nvidia. It's gaining strength, and Nvidia is losing strength. The same with Google here. Google's a little bit stronger, but we were trending down on the trend line where we were constantly getting rejected here. And now look at this. We're no longer trending down. We're now on the right side of this trend line, and we're not going down anymore. And look at the oscillators. Look at the RSI. The RSI is no longer, here for visualization purposes, it's no longer trending down. It is now trending up. It broke out of this trend line. So that means silver is going to start outperforming the major stock indices very soon. So things to keep in mind, very important stuff. But I am bullish on silver, if you can't tell. So things to watch this week. We'll see what happens. But I'm not looking at price. I'm looking at the relative charts. And that's the relative edge for this week. Thank you guys. Appreciate it. Please like, share, and subscribe. And I'll see you next week.